Good morning to all traders and welcome to this Monday's Marketing Insights video provided to you by Orbex. Today is the day that we're going to talk about indices. Of course, the main event to talk about is the huge gap that we've seen created over the weekend, right? There is now a battle that is emerging over oil supplies after Russia and OPEC, Saudi Arabia, let's just say, didn't agree on production cuts. Now, of course, that has sent the oil prices to multi-year lows, as well as other assets. Everything is actually affected and nothing can get away. Commodity pairs, commodity currencies, the Australian dollar, the Canadian dollar, Kiwi as well are under pressure. The equities are under pressure because at the time where monetary policy is easing, whether it is from an economic perspective or economic expectations, i.e. for fears that the coronavirus is going to affect global growth. With this decline in oil now, the fears of inflation falling while interest rates are falling are increasing the fears of a recession now, right? Now, we, of course, have still a long time for this to happen, in my opinion. For the time being, we need to look at the medium term and how markets are likely to perform on the back of the latest developments. So I want to start with the S&P 4-hour chart today. If you recall, last week I was looking at this as 1, 2, 3, 4, and 5. I was looking at this as an A, B, and C, okay, as an expanded flat. Obviously, we can now see that it was moving accordingly, but with this last move to the downside, I fear that we're going to see a further decline. This looks to me like it's going to be an A, B, and a C. Okay, we've had A and B done, and wave C is likely to move further down. Now, where to? Well, this is a good question, but we could literally go anywhere above the 2314, right? Because this could be a deep retracement, or it can even be a move to the golden ratio, which is the 61.8 of the Fibonacci that I have drawn, and that would take us down to 2728 at least. Now, the thing is, with the S&P, we could see prices moving higher in case we get the Fed cutting once again, okay? So the scenarios here are two. I see more downside, first of all, right? The thing is now, with this move to the upside, 3 and 4, 3 is actually okay, a little bit bigger than 1. 4 is very short, and which isn't, I mean, it can happen in different markets. It's just the wave 5 I don't like. So what this means is that we can see an ABC move, right? And after these, we could surge higher for a duplication of this move to the upside, right? So although I think intermediate degree wave to the upside has finished, I'm not sure about the primary degree and, of course, the cycle degree either. If we see prices then breaking above the 33.97, we're probably going for a duplication of this move from 23.21 to 33.97, right? Now, the US index, I want to check again the 4-hour chart today. The US index actually has moved more accurately compared to the scenario that we looked last week. Okay, we're looking at this being an expanded flat, and that means now with this ABC and ABC, we're expecting this to end in a 5-wave manner. Okay, we've had waves 1, 2, probably 3, 4, and we're going for 5. Now the expanded flat, the wave C, the last wave actually is 61.8% extended compared to the first move, so that brings us down to 94.32, right? So again, I'm expecting a bit further downside over here. This is going to complete that move, and to me, it looks like a correction. After this correction, we're going to see prices to move up to near 96.36 potentially for a pullback, and then continue lower again for another move to the downside that is likely going to break below the, what was this level? Now the 94.32, potentially lower. Now, the other scenario would be that we've had a more complex ending over here in this area, and that now became wave 1. We're going to see wave 2, then wave 3, 4, and 5. But I'm not sure the likelihood of this scenario is high. Thank you very much for watching, and I'll see you again tomorrow.